Hello, folks. Brandon Chapman with you today. It's June 30th. It's the last trading day of the quarter. Window dressing, is that what today's move is all about? The S&P is surging 0.5%. It's a brand new, fresh, all-time high. Get it while you're hot. Is this the time to buy rather than stay home and play the bearish side of things? We're going to talk about today because what are financials telling us about the next 2 weeks? When I say financials, specifically banking stocks and some big trades that are going on in these banks. I'm going to show you one today on Bank of America. So another day, another all-time high. Is this something we should probably expect? If we look at SKU, I did a session last week on SKU. SKU's kind of taking a little bit of a dip, but we're very high above 130. We were pressing 155. And one thing you know with high SKU, you're going to have a predominance of up days, small up days, as the chasm of potential risk is starting, it keeps expanding. In this case, it's diminished a little bit. But again, we have significant potential downside here. The only question, is it going to be realized? It seems like all of the concerns we had here in terms of Fed policy, they're late to the game. They're not cutting rates. Tariffs, the reciprocal tariffs, leading to further declines, geopolitical risks, surging oil prices. All of this stuff has been set aside and we're testing new all-time highs. Does that mean they've gone away? Actually, no. We have a date coming up on July 9th where the reciprocal tariffs are supposed to delay is about to expire and they might be put on. Point being, in the next 2 weeks, we may see significant discussion on the front of tariffs. And what's the potential impact on the market? People say taco, and I get that. Look, Trump is certainly a negotiator, and they've made clear they want the 10% tariff. The other is trying to basically get you to the table. Okay. And so the idea with this is that, look, we're in a position right now that the market is susceptible to downside. The only question is, when do we start to realize the potential tail risk to the market? Well, today I find interesting. We're about 10 minutes to close. Notice the gold is starting to pick up here, 1.08%. Financials are in the mix, up 0.87%. Notice gold's kind of resuming its kind of positivity and leadership precisely at a time when we have tariff discussions ongoing and a big date coming up next week. So I find it interesting. Today's trade in Bank of America, specifically in the banking space. Last week, we had a discussion talking about big bearish bets in Wells Fargo and in Morgan Stanley. And if we look over in the big delta section here, it's probably listed 50,000 contracts bought. That's one trade for 8 cents. Well, what is that? That's about $400,000 in one trade, buying 11 July puts. Well, when is Bank of America going to announce their earnings? On the 16th. JP Morgan kicks it off on the 15th. That expiration's before the earnings season ever starts to materialize. Well, look at where the strike price is. It's the 44 put. It's right there, back at prior lows. Last week, Wells Fargo, we had a 12,000 contract trade looking at, was about 73 down here. We had Morgan Stanley, about 130, all targeting those prior lows, all for next Friday's expiration on July 11th. I find this really intriguing. So again, what are we having? Are these hedges that are going to expire before the earnings, or are these trades where they're taking far to the money options, expecting to see some sort of sell-off by mid next week? Well, what would force the hand of banks and pressure them? Well, the same thing we saw back here in February, the same thing we saw, for example, the beginning of April. If you look at the bond space, what is about to happen here, right? August 7th, we saw some big selling in the Treasury bond space. So we saw the pressure early. Then we saw the tariffs being instituted, the reciprocal tariffs leading to what? Bond market weakness. Well, if we bring back Bank of America here, we look at April 7th. Where are you? Kind of hitting the bottom down here. There's April 7th right there. We got hit on the tariff announcement, and then bonds began to hit once the reciprocal tariffs were put in. Could we see a preemptive sell-off in financials before we start to see the bigger selling if these reciprocal tariffs take hold? Countries like China may have to sell treasuries, and they've got a lot of holdings in Europe. They have holdings in China, obviously. They may sell through Europe again, which could lead to what? Treasuries being converted to dollars, being converted to euros, maybe. EUR/USD. We saw a big surge in the euro back here in April, right? Against the dollar. What did gold do during that time? Did any of that money potentially filter into the gold space? So once we found out that gold was not being tariffed, which was really one of the primary reasons we had the strength in here, we saw gold sell off. And as soon as we saw that reciprocal tariff kind of take hold, selling in the treasury market April 9th, we saw the big bounce in GLD, and it was off to the races. Is there going to be potential selling in the treasury market, converting to dollars? Maybe some of it going to the gold space. Could it go to Chinese stocks? I mean, where is this money going to go? And I'm speculating, obviously, that, again, that China may have to support their currency, support their markets. Tariffs are not necessarily a good thing for them. And so the idea is that if they don't come to the negotiating table, the risks could be very significant. So when I look at gold today, looking to try to lead the charts for the day, and seeing the general tenor of large bearish bets in big banks ahead of earnings, with the expiration July 11th instead of post earnings on July 15, 16, it really puts into perspective that we may have more downside in the near term here. Now, it's a holiday shortened week. We got a half day on Thursday. We got a closure on Friday. Our financials about to roll off the map, not necessarily, but I'm definitely looking at an opportunity to get bearish. Bank of America kind of faded today. Try to get bearish financials and banks sometime this week, potentially, depending on how things are shaping up. But those trades, the gold trade, in fact, I sent out an alert to go long GDX today for Ghost Prints. We're looking to see if this thing can come back to 54. But the idea is this is a time where we got to be aware of the risks. Today's the last day of the quarter. We're going to start to kick off tomorrow with a new quarter, and virtually all the rally, nearly 30% of it occurring off the lows, occurred all over the past 90 days, with the exception of some weakness right here at the beginning of April. So it's been a great quarter. What a time to start to take profits as we enter a new quarter tomorrow. That's what we'll be watching for: weakness in financials, strength in gold, and again, how is the market going to address and what news is going to come out regarding tariffs? Well, folks, that's what we got for today on the video. We'll catch you back next week. You have a great one. Thank you.